Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, middle of the week. Markets are sort of coming along quite nicely. There is that US presidential debate which is underway. I think should be in the final laps. It's been on for the last hour and a half or so. Lots to talk about here. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema is with us today. Guys, hi, good morning.
Hi, good morning. How are you feeling? How's your eye?
Eye's doing better actually, until I got a lot of messages yesterday evening and this morning as well. I was wondering that I was off in the morning, so I'm wondering what were they watching. But yeah, maybe some live feed on Twitter or something like that. So yeah, eye's feeling good, I'm feeling good, and the market's looking pretty okay.
So Prashant, before we get chatting about the markets, right? You're a close watcher of the presidential debate. Your quick word, one line.
I mean, I think it would have to be advantage Kamala Harris. Right?
You think?
I mean, I think I only watched the first like 20, 30 minutes. Actually, not even watched. It was running in the background.
Yeah.
But then, I mean, a lot was said after that, right?
Yeah.
It's still going on.
100 minutes, so now we're in the last stretch.
Last stretch. So we'll see. The final sort of take from pundits, and we certainly aren't one. But there is a lot to talk about here about as far as markets are concerned, right? And I want to take a quick look at, there are some flashes at the bottom of the screen as well. US futures are lower. Dow futures are down more than 100 points. So futures are reacting to, at the margin, to what's happening to the presidential debate and what markets are really taking away from all of it. But yesterday, the market, the Nifty, closed above an important technical level. There was a bounce, nice bounce. 40-day sort of exponential moving average is what the market managed to take out. It would have been a very good session. It was not a very good session. It was just a good session because from the day's high, the market sold off almost about, 80, 90 points. The high yesterday was about 25,130, and we left off at about 25,040. In the last 60 minutes, that pullback really came through. Now, overnight, equities have ended higher. The S&P is up about 0.5%. The Nasdaq is up about 0.8%. So not bad at all. U.S. banks were the most notable laggards, and the index representing that, the KWB index, is down 1.7%. And that is largely because of, new Basel rules which ask large U.S. banks to have more capital, to keep more capital, and that gave during market hours. It was well advertised. There was a Bloomberg article before. It was what came through was in line with expectations. Big drop in yields. Now, the 10-year dropped, 6 basis points to 3.64. And if you look at the entire curve, the 2, the 5, the 10, they all closed at new lows in the last 12 months, right? This is interesting because, last couple of days, it's been kind of confusing because markets have not got a handle of what the Fed will do on the 18th of September. Will they kick off with a big bang 50 or will they stick with a 25? A 25 is what is in the price. There were a large amount of auctions which happened as well yesterday. But I think, bond market was actually pretty strong. So dollar was flat. The other thing, 101.64, nothing very much by way of change. The JPY, the outperformance continued, and the yen has rallied against the dollar, and that's largely, I think, thanks to the US yields falling. We're back at about 142.3. The big, the only thing to watch with this, of course, is whether there will be another round of sort of, funding issues, because the Japanese yen is still, over the last, historically, has been a big funding currency in that sense. Oil prices, that's the other big story, and this, I think, we'll talk more, but 3% lower, and Brent oil prices are down under $70 a barrel. It's the lowest in the last couple of years. And this is despite the fact that, OPEC has actually curtailed some of the supply increases to try and sort of push prices higher or support prices. Oil prices are falling. And it is not just oil. If you look at base metals and what has happened there, if you look at iron ore, all of this, of course, is indicative of a weakening global growth picture. China especially is the main reason what sort of global markets are really watching out for. All right, now here in India, just to circle back the levels, we face resistance, and I put this level yesterday as well. Actually, 25,112 is a 61.8% retracement of the previous decline. That's essentially the decline from 25,333, the all-time high, to the recent low. We crossed this level yesterday, but respected it and then fell back under it. So that's the first level to take out on the upside, 25,100 roughly. And I mean, once you're able to sustain above that, you're looking at the all-time highs, which is 25,333. On the downside, the support comes in at the 20-day moving average, which is 24,885. You have the Bank Nifty, which closed above the 61.8% retracement, not from the all-time high because the Nifty Bank never got to the all-time high, the most recent decline. And, you're essentially looking at a retest of the potential swing high of 51,750. Supports come in at about 50,945 or so. So that's a 20-day for the Nifty Bank. GIFT Nifty will come up on your screen, giving you a quick indication of the open. It's about 13, 14 points lower. I mean, equity indices overnight were higher. But you look at commodities, you look at oil prices, you look at, some of the comments coming in from large global companies like BMW. It's a bit of a mixed picture that you're waking up to. And of course, then you've got this presidential debate, which markets will weigh in a more decisive way once opinion starts to come through. There'll also be, by the way, a polling which is done immediately after, which tells you who won the debate, right? I mean, there'll be a sample, and out of that sample, that sort of verdict in that sense will emerge. And that will put someone ahead, maybe marginally, but I think that's something else to watch out for. Rima.
Well, I'm watching the crude prices. Crude prices plummeted nearly 4% yesterday. We're now staring at a Brent handle below $70 per barrel, lowest since December of 2021. And this is the second time that OPEC has cut the demand forecast. The reason why crude prices have come down is because OPEC Plus has cut the demand forecast, and the cut has come in for the second time in the last 2 months. And now crude prices are down 10% since the beginning of the year. So let me just put on board the numbers, the demand forecast that OPEC has put. So for this year, 2024, OPEC is projecting an oil demand of 2.03 million barrels per day, a cut of 80,000 barrels per day. So that's the cut that's come through. For 2025, the cut has been about 40,000 barrels per day, so it now stands at 1.74 million. So anyway, 2025 demand forecast was lower than that of 2024 at 1.78, but that has been further slashed down. Now, on the sidelines, you could say that a cut in crude prices is positive for an importer like India. But also bear in mind that the cut is because of slowing global growth, particularly China. China is emerging. We know that China was a problem, but now the demand indicators from China appear to be a little worse than what was previously anticipated. So out of that 80,000 barrel per day cut that we've seen for 2024, 50,000 is on account of China slowing down, demand from China. One, of course, is the problems with residential, etc. It's just not picked up. But secondly, it's also the transition to cleaner fuels like LNG, EV, etc. And that's also fueling the cut that we are seeing in terms of, crude demand. So I think that's the worry, right? That is the decline in crude prices in a way signaling that global growth is slowing down? Are we going to be staring at a mild recession? And if you see the way Asia has panned out, Hang Seng in China today is under pressure. Hang Seng is down more than 1%. China is down close to about 0.8%. But the rest of the Asian markets, like Taiwan, etc., are holding up in the green.
Well, that's right, Reem. I think the way to look at it will be a look at those sectors or companies that have more domestic demand and they have a tailwind of falling crude prices. So we'll try to get to that in just a bit. But the buy and dip strategy, well, that's been working. So I think you stick to that. Asian markets, they are lower today. Maybe in the first hour of trade, you start a little bit lower, but you look to buy the dip. That's been working, and that seems to be the case as well. The Nifty Bank, that plays out the weekly expiry. Yesterday, it was promising in the middle of the session, but it couldn't end at the high point of the day. So that will be the big mover in today's trade as well. And as I said earlier, crude oil prices, well, when they are lower, they'll keep select stocks as well as sectors enthused. So we'll keep an eye out on a few of them. In yesterday's trade, you had a bit of a short covering bounce that played out on the Nifty. The Nifty ended with the open interest down by close to around 3% or thereabouts, and it ended higher on the Nifty Bank. It was virtually unmoved out there. How are things positioned with regard to the client as well as the FIs? The client, they remain net short, not very aggressively, 40,000 contracts on the short side, while the FIs, they remain net long with close to around 150,000 contracts on the long side. So you need to keep that in mind. The client positioning is at around 1.5 lakh contracts. The Nifty Bank, that's the important one in today's trading session. So let's look at a couple of strikes. 51,300 call, well, that's the important strike out there. You had 10 lakh shares that saw open interest build up and 51,500 call as well. Both of them did see some writing, and the premiums did come down substantially from the highs of the day, telling you that there was writing being seen at those levels. Which brings us to the levels then. Going by the options data, going by the recent high as well, 51,500, 51,550. This becomes the important resistance zone. but you'll have to mark your way on the downside because the 20 DMA was recently breached, but we did recover from there. So this is the important mark. If you can get past that mark, well, we could see a big short covering bounce that plays out on the Nifty Bank as well. The Nifty levels as well come up for you. You have the 20 DMA. Well, that becomes the important mark on the downside. While resistance, going by the options data for the day, 25,170, the bears are positioned that they can defend these levels. Now, since oil prices are at the lowest we've seen since December 2021, there are a few stocks, few sectors as well that will be in focus. Paint companies, we highlighted this last week as well. They're coming out after quite a big underperformance. So we'll keep an eye out on all these names. Asian Paints, that's been the big winner. So maybe the leader continues. So these are the important stocks because of falling crude prices. Input costs go down, so that's good news for them. It'll go down with a lag though. OMCs as well should do pretty well in today's trading session because lower crude normally means good times for them. And Pidilite, we had Nuvama yesterday who joined us on the show, and they mentioned that that could be another potential beneficiary. So in terms of potential beneficiaries of this drop in crude oil prices, those are the stocks and sectors that I'm looking at.
Thank you. Let's get to the equity calls then for the day. It's Lawrence Belanco of CLSA who says, following signs of slowing upside momentum in the month of July and August, the Nifty's uptrend has stalled, with the price action now threatening the support provided by the 50-day moving average, which currently stands at 24,649. A break below this 50-day moving average would further provide evidence of corrective consolidation phase. Below the 50-day moving average, the next chart support comes in at 23,898 to 23,900. A clear break below these levels would signal a change in the behavior, leaving the Nifty vulnerable to a deeper correction. In relative terms, it's worth noting that the NSE mid-cap sector's outperformance versus the Nifty has been capped over the past 3 months, leaving a well-defined trading range taking shape.
Well, we also have Sanjeev Prasad who weighs in. He's, of course, with Kotak Institutional Equities, who says that the recent correction and some of the quote-unquote narrative investment and PSU stocks may reflect mild global risk-off sentiment, changed preference for defensives versus narratives, and increased focus on the fundamentals of these stocks. However, he says he still sees a large gap between the market caps and fundamental fair value of these narrative stocks. So more to go, according to Sanjeev Prasad.